Alrighty then. Good day, everybody. Welcome back to our channel. Thank you so far for supporting us and trying to find out more about your finances and such able so we can actually go this journey with you. Without further ado, today's topic we're just going to be doing a practical example of financial accounting. We're gonna try and do from start to finish of the process. Of course, we can only use minimal examples just for the purposes of making an illustration. The process itself, in full, it does take very, very long, and I don't think any of us want to be here for hours. But nonetheless, let's get into it. Okay, so the company background of the company that we're going to be bookkeeping for or starting the financial accounting process for is called MAS, right? So, MAS was established as a company, PTY Ltd, based in East London, established in East London, South Africa, and it was established in 2020, right? Their trademark, or sorry, their trade rather, is manufacturing wardrobes, right? We are choosing an inventory type of business so that it also becomes more practical to the entities that deal with goods. For businesses that deal with services, it is a bit easier, but we just want to, for the sake of completion, to also take into account inventory and closing off, because those charts of accounts do differ slightly, right, between a business that deals in services and a business that deals in goods. Okay. Okay, let's go. Their trade is in manufacturing wardrobes, and they are currently the preferred distributor in the area, and they sometimes outsource their fitting functions to sole proprietors in the area. Excuse me. I don't know if you've noticed, but when you go to India or like builders or macro, yeah, macro as well, there's usually sole proprietors that are around the area who say, "Angiyawazi ukupenda," or "I can cut grass," or whatever the case is. That's the kind of sole proprietor we're talking about to make it more relatable, right? Okay. So this company only trades in the South African rand, but take note that with the actual practical example that we're going to be using with a said software, the currency won't be in South African rands, right? The reason behind that is because the sample company that software entity has, its default setting isn't in the South African currency. But we'll just explore, right? We'll explore what our options are when we get there. And now your task, or rather our task here, is to assist them with the bookkeeping for the month, right? They are then going to provide us, as mentioned in the previous video, with all of the information and data that we need to do this, right? Okay, moving right along. First of all, so they've given us the bank statements or statement that we'll need in order for us to um, use as a source document to do the bookkeeping, right? For a lot of businesses in 2024, I'd assume have at least, at the very least, a bank account, right? From which they transact, they pay their suppliers, they receive their invoices. Of course, with the exception of cash, cash transactions also need to be captured, but we won't be covering the differences or the nitty gritties that come with handling cash in this video. It's an up and coming, yabo. We've got loads and loads of content to work on, but for now, let's focus with the basics. So, going back to converting those bank statements, the reason why we are converting it is so that we're trying to minimize room for error, right? So capturing the transactions from the bank statement to the accounting software, it is an option. You can do it. That there isn't an issue with doing it. It's just that we are trying to make sure that there's minimal room for error, right? Because if you capture it manually, you might miss a transaction, or you might change the format of a number, and then instead of 5 rand, it's of 50 rand, etc., etc. Right? So it is advisable to do the conversion of the bank statements. So when you get to that accounting software that you've chosen, the upload version of the document that they usually require is a CSV. Some can handle PDF, but CSV is the number one preferred format of the document that you'll be uploading, which is, of course, the bank statement, right? We're not talking about invoices or receipts as yet. Those can remain in JPEG or PDF, etc., etc. So we've listed some websites that you can check out that can help you to convert those bank statements from PDF into CSV. That's if your bank doesn't provide you with those already, right? Okay, so this is the bank statement that they provided us with. As you can see, some revenues mostly spend. Realistically speaking, we've had the privilege to see how some businesses operate. Chances are there are or will be some entertainment expenses here and there, especially if the business is relatively new. But those usually relate to entertaining clients, right? So you're still trying to win business, you're still trying to, source contracts, etc., etc. So that's when it'll be justifiable. But in the case where you are Oh, excuse me. I'm still trying to escape the flu. But in the case where you are buying this McDonald's for yourself as a treat or whatever, or however else you want to explain it, then how you categorize that differs, right? Because now it becomes money that you spend but does not belong to you, right? Sikhumbule ukuthi there's a big difference between you and the business. Even if you're the only director in that business, legally you're not the same person, right? So even your finances need to be treated separately. So you spending money that does not belong to you ordinarily, you can even take this analogy that you're spending your friend's money, right? You'll need to pay that money back, in essence. In terms of when, how, etc., etc., those sort of policies would need to be determined by your accountant or by you at a later stage. But it's not something we're gonna cover now. In essence, what we are trying to say is that McDonald's meal that you had to spoil yourself because you just won a new contract and you did exceptionally well, it's a loan. It's a loan that the business gave you and you'd need to pay it back, right? We can't treat everything as client entertainment, even though it's not, because it's not ethical. It's not what really happened, right? Okay, so in the illustration that we'll be working on, this is the bank statement. If you need to take a screenshot, if you need to I don't know if it's possible, would have just sent this to you. But in any case, these are the numbers and details we are working with, right? Okay, so let's just quickly discuss the different accounting software that you can have. So cloud, right? Cloud is the best way forward. Cloud is your friend. Cloud is 2024, the beautiful thing about having or choosing a cloud software is that you're able to access it all the time, from different modes, right? You can access it using a cell phone sometimes, depending on which one it is. You can access it using any other computer. You just need, of course, your login details, and then boom, you're good to go, right? So we've also listed some popular um, context of that you can Google and find out which one works best for you. But remember, the main thing with the accounting software is not only being able to create invoices, but it should be compatible with the business that you're doing, right? So if you're an inventory based business like we are, it wouldn't make sense for you to sign up for a package that excludes inventory counts, that excludes accounting for work in progress, etc., etc., because now we are risking, or rather putting or making room for error in a space that how we account for that inventory, how we account for goods is not necessarily accurate, right? And the standard that govern financial accounting, it has its benchmarks, it has its guidelines, it has its minimum standards, right? The records need to be accurate, they need to be on time, they need to be what's this? Why am I forgetting these? But these are the bare basics, right? So if we are using an accounting software tier, so to speak, right? Because most of them have tiers that isn't compatible with ours, then we are underserving the business, right? We are risking reporting inaccurate information to our stakeholders, and we're just losing the plot completely. So research. If ungekho sure, most of them have free demos that you can try out, or you can reach out to their consultants, or you can reach out to us if you like us, to try and help you to navigate the different accounting software that might work for you, that is as comfortable for you, that you might not need as much support with, right? For example, I'm a freelancer. As I know Blue Money is a relatively new accounting software. I don't know. I don't know if accounting software is the right word. Um, but it's tailored to freelancers because of the main functions that it does, right? It doesn't necessarily eliminate your accountant, but you are able to operate your business without relying on one, right? And then you have for the PTYs and other forms of entities, you have your QuickBooks, your FreshBooks, your NQ Books, so all these many other options. As it relates to the charges, of course, they all charge differently. Some don't even charge in the South African rand. So it's up to you, really. What's your budget? What are you willing to spend to make sure that you have the information right, the information that works for you, the information that you're able to present to your team, as well as to maybe even prospective investors to say, this is what we are doing with the money, this is what we want to do, this is where we're going, right? Remember the end game. That's why choosing the right accounting software is so important. We're here to help you if you get lost, right? Okay, cool. So we've chosen accounting software. Now we need to go through the chart of accounts, right? So each chart of accounts, to explain it simply, each chart of accounts is basically the categories that we are going to need to assign our transactions to, right? So is the most common things like bank charges. Um, it's highly likely that you'll have to capture bank charges, right? So go allow my chart of accounts. We are creating an account based on bank charges. Chances are that accounting software you go with has bank charges as a default account, but just to be sure, you can review your chart of accounts to make sure that it's there, and then you are able to chop and change these chart of accounts as it um, is compatible to your business. Sorry. So yeah, in terms of the setup, you may need an accountant, you may not, but if you still have room and space to explore, please do. I mean, um, it would be better to have 85 chart of accounts that you feel accurately describe what you're doing than to have five, but it's a complete mess. By the time you get into consolidating accounts, etc., etc., um, yeah, it's easier. It's easier, right? So it's more is better than less in this case. I hope that makes sense. Okay. So, we'll then be moving on to the practical demonstration. Remember that bank statement we shared with you about 2 slides ago? That's where we're heading to now. Alrighty then. So, the account software that we decided to go with, Intuit QuickBooks. Well, yeah, we had to choose one from the list. So, this is their sample company, right? Kuya, the sample company. They have limited currencies, not forencies. That's not a real word, I think. They have limited currencies that we can use, but we move and operate with what we have. So if you remember that bank statement that I shared earlier on, that's what you're going to be using to record one or two transactions, just to practically show you how to do bookkeeping, right? So remember we first spoke of converting our bank statements. With this sample company that we're using, they chose to link their bank account. So actually, let me just show you. So this means that the accounting software and its users can see what's going on in the bank accounts that are linked, right? NB, very important. This doesn't mean that they can now bank on your behalf or do anything on your bank account. They can't even buy airtime, nothing, right? The only thing that we can do is to see how much was spent on what and when, as well as how much income was received for whatever the case may be, or from whichever client. That's what it basically means when they say the accounts are linked. So that step, as it relates to converting bank statements, because this account is linked, we can skip it, right? This sample company linked two bank accounts, so the credit card as well as the bank account, the main account, right? So they're trading in the British pound as their functional currency. If functional currency is basically the currency that you are reporting in as it relates to imali zenkampani osebenza nayo, right? So I just also want to explain the differences between these two amounts quickly. Once you follow through all of the hoops of the accounting, these two amounts should be the same. So you would have done bookkeeping yako, you would have reviewed your transactions, you would have reconciled it. Yabole, but in reconcile. It's part of the steps of financial accounting. You would have reconciled it, and once that's done, then these two amounts should be exactly the same. So njengamanje, they're not the same because there are 12 transactions that we still need to bring into the books, right? And these are the transactions that are in question. Kone deposit reference ibiza Jordan Burgess, not sure how to pronounce that came in. This is the date. And I've changed the filter preferences. My mistake. On the March 2024, right? So with the linked bank accounts, like I said, it's easier. You don't have to do the conversions. You have live feed into your bank account, right? Okay, then step 2. Sati, let's check if the chart of accounts that are created for the accounting software correlates to what we do as a business, right? So with QuickBooks, I can easily find that here under transactions, because I'm already under the main heading NIDA, chart of accounts. Let me just go to that tab and I'm able to see what's going on, right? A chart of accounts is basically where all of your accounts reside. So I can see this is the current bank account. It's just a description of what it is, the currency it's reporting in, the difference that we already spoke about, and then the list and you can just go through it whenever you have time. You can add and delete as you see fit, right? So this is you reviewing our accounts. As we mentioned, we are a business that deals in stock, so a stock has to be here. Let me just check if they have a stock account. So I'm searching here under the filter. Network, come on, participate. There we go. Stock assets is a current asset. Yes, I agree. Okay, the balances of QuickBooks. That's the pound worth of stock economy at the moment. Alrighty, I'm happy. Economy, the important one that I want to look into, right? So I'm happy with my chart of accounts. I can see my bank statement records are there. But now what I want to also show you is how to manually capture the some transactions using the bank statement that I showed you 1 or 2 slides back, right? So let me just check what's going on there. So I have these. So this Capitax Shabalala that came in on the 9th of June for 2,360, right? Remember the date, 9th of June. The client is Ushabalala. He paid 2,360. Right. Ooh, Abel, what's going on? Right, let's go. So I'm gonna say new. So this is just like a shortcut that I can go to by creating new, and then I'm looking at something that relates to customers. So this is the right tab that I'm looking at, and then invoice or sales receipts. Small difference between the two. So invoice you created at the time when you start billing the client that you're working with, Ushabala in this case, but for now we can assume also Shabalala uskoke before we could even create an invoice for him or her, which is why I am then jumping to sales receipts. In terms of changes or effects it might have on VAT, there's none. As long as I apply the same rules, right? There's none, right? It's just that in terms of reporting a balance sheet, that's where the effect would be, which basically separates the difference between an invoice and a receipt. But we'll have another vlog opportunity to go into each chart of accounts in detail, right? So here, I don't think I have a client named Shabalala, so I'm going to create one. I'm going to say new. Oh, this thing must not expose me. I'm going to say new Mrs. or Miss Shabalala. Shabalala. Right? All these other details, you can add them. I'm not going to do it now because I want this video to be sweet and short and to the point. I'm going to say save. Okay, we say what? 9th of June, eh? 9th of June from Shabs and Shabs. They paid into our current bank account, which is the main bank account that I showed you earlier on. And what did we do for them? Let's see. This product list of services, you could create it after you've looked at your chart of accounts, right? So it's a sample company. They've done everything for us. We just click and we collaborate and move, right? Let's say we hosted an employee celebration for wardrobes. I don't know why, but I'm just going to click the first option, of which they paid 2360, right? I'm going to say we are a VAT vendor, so I'm going to say inclusive of tax. I'm saying inclusive because that's the total amount of money that received from Shabalala. This is to then make sure that I don't end up overpaying taxes. I don't necessarily need to, right? My VAT inclusive number is 2360, making sure it's right. That's the VAT rate. Remember, we are using an international software. That's why it's got strange percentages for VAT purposes, but the important thing here is that it's allocated, right? Let's just double check if our transaction is correct. This is our client. Yes, that's correct. This is the right date, and this is the right service or product that we offered them. Here we specify what account number it is. The VAT treatment is correct. I'm happy, so I'm gonna say save and close. So there we go. We were able to capture or bookkeep income that came into the business, right? And then let's see, what else did they want us to bookkeep? SARS interest payment that came in on the 10th of June 2020. SARS interest payment, just remember, 50 Rand 27 cent on the 10th of June. This is an expense. Right, so I'm going to say new again. This time it's a payment, so second tab. So let's quickly clarify the difference between a bill and an expense, right? So you create a bill that makes you aware what you owe SARS this amount of money, and it needs to be paid by a certain date. So that helps us to honor our obligation to our suppliers. That's why we create a bill. But in the case where you've already paid it, right, and it's reflecting off of our bank, then we go straight to expenses, which is what's happening in this case, right? Let's jump straight into it. Expenses. It said it's what, the 10th, right? Network, please help me now. It said it's the 10th. The payee is SARS, so I'm going to add a new supplier. See, the difference is there. Just make sure that you have the right person at the right time. SARS. As long as we know who it went into, because sometimes suppliers also want a recon of what you've paid them according to your records, so it's important to make sure that you allocate it to the right person. We paid them from our main account. Let's see. Some call it finance costs. Let's see if it's there. Finance charge. Nope, it's not income. Interest expense. There we go. It's an interest expense. We paid maybe payroll taxes late, so I'm gonna say PAYE late payment. The amount, it was 50 rand 27 cents, ne? Yeah. Interesting question. Can we claim VAT for this? Consult the SARS website, Bazalan. I'm gonna say, yeah, I'm gonna guess a random thing for now. I know the answer, but and easy. So let's just double check to make sure everything is correct. Remember, we're VAT vendor, so VAT matters to us. We paid 50 rand 27 cent exactly to SARS. So here, assuming it is something that we need to pay VAT on, I'm going to say it's inclusive because the full amount is 50 rand 27 cent. It is an interest payment, as it the description of the bank statement, it is the right account, it is the right supplier. I'm happy, so I'm going to say save and close. The date is correct as well. So there we go. We've been able to capture two transactions, right? So you just keep doing the same thing until you've exhausted that bank statement they've given us, and then you move on into reviewing all of those transactions. Then you reconcile. Software is nice enough these days to show you how to do it. You see, there's a tutorial of about 2 minutes that you can go through to reconcile, and then boom, bam, look at you. You've been able to do your financial accounting, or at least the most important leg of it, before you can move forward. Okay, so good progress so far. Just recapping what we've been able to do. So we did bookkeeping, although it's two examples, we had to keep it moving. I mean, you saw that it can get technical, right, in terms of making sure that everything is exactly where it needs to be. But if you're still starting out, it's not something you need to sweat about. What's important is that the work gets done. So we've gone through how to do bookkeeping, both income as well as expenses. We've showed you where to go about in terms of reviewing, reconciling. So, old school folks, you might even need to print out your bank statement physically and do, like a red tick and agree against your bank statement and what's on your system to make sure that the balances are exactly the same, right? As we showed you in the previous slide. And then if they are, as at the end of the financial year, then we have a trial balance. It's time to call mass, right? Let's have the financials chat. Let's have the disclosures chat, what we need to take into account, and we're able to just sort of consolidate all of your financial data to make sure that we didn't leave anything out. It's complete, it's accurate, it's on the ball, exactly what the accounting standards require. So now that we've done that, the next set of, is it tutorials? Let's call it vlogs. The next set of vlogs will be also going into management accounting. We'll be going into, the reviews, what it is, how you can prepare for it, best practices, etc., etc. But we also mentioned that we'll be going into the chart of accounts in detail, how to create your product or service list in detail, maybe also explore the other different accounting software packages that are out there. Look, this is a simple, not simple, but it's a doable thing. Bookkeeping, it doesn't necessarily have to make you like super nervous and sweat and everything like that. Start from the bottom, build your confidence. The more you grow, the more you learn, the more you're able to like show off, consolidate, do all these fancy footworks that accountants do. Got again, we also want to avail ourselves. Should you need some guidance or consultation and would love to steer your own ship, that's also fine. We don't have to do all the work for you. We're happy to do it, whichever way you prefer. And thank you for coming to our TED Talk. See you next video. Thank you. Bye.